All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Monday, everybody. Today is June 9th, 2025. And the top story this morning is the largely peaceful violence that broke out in California over the weekend. I really don't want to talk about this, but here we go. It's the biggest story in the world this morning. We had cars were largely peacefully burned. We had police cars largely peacefully pummeled with scooters, taxpayer-funded scooters, by the way, and bricks. I saw a cop was largely peacefully hit in the face by a chunk of concrete that was tossed at him off an overpass. I saw a reporter shot in the leg by a largely peaceful rubber bullet fired by a police officer's gun. I saw stores were largely peacefully looted. It was really great. Oh, by the way, looters are reminded to please keep their theft under the courtesy California $900 limit to avoid prosecution. Thank you in advance. Hey, this was a good time, but I just want to remind everybody that it was largely peaceful, right? The people who told you that the virus was because some guy ate a bat, and the people who told you that President Prune Juice was sharp as a tack and coherent and the best version of himself would like to remind you that this was all largely peaceful and that you should just continue clutching your emotional support semi-aquatic platypus that you bought after January 6th. Oh my God. ABC News this morning actually described the riots as a bunch of people just having fun watching cars burn, expressing worry that, cops coming into the area might inflame the situation that is already literally in flames. Like, we wouldn't want to inflame the flames, right? See, yeah. Be a shame if this situation became inflamed. My goodness. Smoldering in the front there, by the way, this is a whole line of Waymo cars that were burned. In the front, you can see a Waymo car is on fire here, and then smoldering in the background or going up in flames in the background. That's Gavin Newsom's chances of ever winning a swing state. Yep, it was a largely peaceful weekend in LA. So congratulations for that, guys. Yeah, look, if you want to protest, right? First Amendment and all, part of being this country, right? Nobody's got to agree with you, but hey, it is your right to do so. That being said, burning cars, looting stores, throwing bricks at cops, not a form of protest. Nope. So if you want to FA, don't cry when you FO. That's all I'm going to say. And also one last thing, all the politicians that are egging you on right now, all the politicians that are encouraging you to do this, they want one of you dead. They're hoping that some second lieutenant in the National Guard with an itchy trigger finger gets spooked and accidentally lets a round off, hits somebody in the wrong place, and then they can use your death as a campaign token. They want that to happen. See also Useful Idiots. Keep it peaceful, guys. Keep it legit peaceful. Moving on, with all available haste, we've got a lot of news about China going on this morning. First of all, trade talks are underway between the U.S. and China in London. We've got the typical players, Secretary Bessent, the two other guys, Lutnick and Hess is the guy's name, meeting with He Lifeng and the Chinese delegation in London. So, hey, the market continues to largely shrug off the risks of the trade war reigniting, even though right now we've got the taco thing going on and the tariffs are at least somewhat lessened from the obscenely high Liberation Day levels. But those could come back any moment. And look, the S&P is going to open above 6,000 this morning. It closed above 6,000 on Friday, heading higher here this morning. The market continues to just totally disregard the risk of the trade war here. We have had some progress on the rare earths front. On late Friday, we had the announcement that China is going to clear exports of rare earths for certain auto companies. There's one auto company that was not on the list. You'll never guess which one that is. That's an interesting angle to this story. We've also got freight rates between the U.S. and China exploded higher in May. As soon as the tariffs went back, we saw all the companies scrambling to reorder inventory that they had previously canceled in April. And so freight rates went a lot higher. That's probably going to start showing up in the economic data in June and some of the import and export data. It's going to mess with the GDP figures again. And we have got a big deflation problem in China. Look, everybody's been screaming about inflation for the last few years, self included. It's the opposite in China with all that debt going up in smoke because of the real estate crisis in that country. Prices are actually going down. And as much as that might sound like a relief to anybody who's been living in the US or Europe over the last few years because the price of everything has gone up, when you have big deflation in a heavily indebted country, that makes that debt harder to pay off, which makes your debt problem worse. So this deflation that we're seeing, a PPI above negative 3%, that means the debt problems in the developing world in China are not getting better. They are getting worse. Watch those Chinese banks. We've also got Warner Brothers Discovery is breaking up this morning. Breaking up is hard to do, I'm told, but that stock is skyrocketing because often when companies split up, the daughter companies are worth more than the sum of their parts as a whole. So we've got that stock is rallying. Apple's Worldwide Developer Conference is underway on Monday. And everybody is wondering, will Apple do anything to make some money off of AI? Remember this time last year, we heard all about, Apple Intelligence is going to be so great, and the iPhone 16 super cycle is going to ignite those sales. And, well, that came and went, and Apple Intelligence still doesn't really work at all. And the iPhone 16 was a flop, and so they're just hoping for any reason for Apple to do better here. And they're happy to be talking about AI because if they're not talking about AI, they need to talk about tariffs and the trade war, which is something else that Apple shareholders would really rather not discuss. We've got an interesting story coming out of Japan this morning. They are looking to do a government bond buyback. We talked about this last week or the week before that. Japanese super long government bonds, the yields were blowing out on those because the only people buying super long Japanese government bonds is the central bank. And the central bank is saying, we're not going to buy that many of them in the future. And so the prices of those bonds were crashing, sending their interest rates a lot higher. And now this morning, the Japanese Ministry of Finance is talking about buybacks, which would mean they're issuing short-term debt in order to retire their long-term debt, which is just another way of governments interfering in bond markets to solve a problem that was caused by governments interfering in bond markets. So good luck with that one, Japan. And we have got Sonova has filed for bankruptcy. Another solar subsidy farm is going out of business. How many is that? Who's counting? We got a lot to talk about this morning, guys. Why don't we shrink my big melon of a head and let's see what's going on in the world this morning. Hey, this is a reminder to largely peacefully hit that like button and that subscribe button right next to it so you can come on back tomorrow and have your coffee with the melon heads as we go through markets. And right now, you got the S&P is kind of humming along here, unchanged pretty much, up 7 points, 0.13% higher ahead of the opening bell, but we will be opening above that 6,000 level. We've got the Dow is higher by 39 points, or 0.09% higher this morning, and the NASDAQ is higher by 16 points, 0.08% higher. So not a lot going on in stocks this morning. Meanwhile, the U.S. dollar is pretty much unchanged here, 99.18. That's down a single basis point here, but above that 99 threshold. The dollar continues to do what the dollar's been doing. Looking over at the bond market, we've got a mixed bag. Not a lot of price movement here this morning. The 30-year Treasury is at 4.985. That's higher by 2 basis points. Meanwhile, the 10-year is lower by a fraction of 1 point. At a 4.513. We've got the 2-year is lower by almost 2 points, 4.026. And the 1 month is up about almost 1 point, 4.247. So we're kind of quiet in the bond market this morning. Bitcoin, meanwhile, having a pretty good morning here. Actually had a pretty good weekend. We're up 4 days in a row now. $107,216 is priced on Coinbase. That's higher by about $1,400 this morning. Look, no real big news in Bitcoin over the last couple of days, but I would point out a trend I've noticed, and the Wall Street Journal has picked up on this as well. Businesses are binging on crypto, dialing up the market risks. About 60 companies with no prior ties to the crypto market have embraced the so-called Bitcoin treasury strategy, popularized by Michael Saylor. We are seeing this trend here, guys. 60 companies now, which not just MicroStrategy, right? Michael Saylor's infinite money glitch, where he borrows money to buy Bitcoin. And then the money he borrowed, he spends on Bitcoin, driving price higher, driving MicroStrategy stock higher so he can borrow more money to buy more Bitcoin. Rinse, repeat over and over again. It works until it doesn't. That is the infinite money glitch. We've now got 60 companies doing that, which means we are seeing leverage build up in the system. This happens before the pop, guys. Sometime, I think between now and October, I've said this several times, we are going to see somebody go belly up in the crypto space, and they're going to drag the whole market down with them, just like FTX did last time, just like OneCoin did before that, just like Mt. Gox before that. This is a very predictable FOMO cycle, so just be careful on leverage when playing around with Bitcoin. Now, going on in the commodities board this morning, we've got some interesting things happening here. Gold is trading sideways. Spot gold, $3,315. That's up by about $5 this morning, or 0.16%. But we are seeing that catch-up trade with the other precious metals continue here. Look at silver, 36.32, higher by another 34 cents this morning, almost 1% higher. I like the shiny. We've got platinum, $1,200 for July platinum futures, up another 2.8%. When you've got gold trading sideways and silver and platinum playing catch-up, that tells me that gold's probably good here. You've still got that precious metal trade going on, but people are now starting to look at the gaps, look at the move at gold relative to the others, and instead of chasing gold at this level, they're buying more silver, they're buying more platinum. As those ratios come down, that should reignite enthusiasm for gold eventually. But this is looking pretty good in the metal space here. We're going to look at some charts in just a second. Palladium is higher by 2%, and crude oil is actually higher by about 0.1%, $64.68 for WTI crude. Now, taking a look at the silver chart here, guys, we are at $36.35, like we mentioned. Again, I showed this chart not too long ago. We have broken out of the resistance of the last few years. Really, we got to set this to, we'll say, weekly candles to be able to see it right. The last time we were anywhere near these levels was in 2011 after that monster bull run that silver had, where we went right up to $50. And look, guys, as far as technical charting goes, there really isn't any to be done here because there's no resistance at all between here and $50. That's not to say we're definitely going to $50. I'm just saying charting is pretty much a useless gesture at this point. And if we scroll way out, we got to set this to monthly candles to be able to see that. You can see, again, even before 2011, the last time we were anywhere in this ballpark was the Hunt brothers in 1980. So silver's looking really good here. Meanwhile, the gold to silver ratio continues to fall this morning. We're now at 91.2 after peaking around 105. This is gold trading sideways with silver catching up. Now, I went over this on my Patreon Zoom on Friday. We were looking at the gold to silver ratio and kind of estimating some of the levels, what a return to normal in the GSR looks like. All I can tell you guys is that $50 level, it's unlikely, but it is possible here. It wouldn't be crazy to find that $50 price in silver here. If gold were to just trade sideways, and we go back to a gold to silver ratio similar to what we saw in the wake of the silver squeeze, that gets us to $50. So it is not so crazy. And certainly mid 40s is in the cards here. Just the gold to silver ratio going back to the middle of this band that we've been in for the last couple of years, that takes us to the mid 40s for silver. And platinum, again, guys, 1,194 shown here on the front month platinum futures. It was 1,200 a few minutes ago, but platinum continuing to run. And I got to send a shout out to Bob Coleman and to David Morgan. I had them on the channel last month. Both of them called for a monster run in platinum. And that was before this even started. So that was a good call, David and Bob. And I want to point out the gold to platinum ratio. We're seeing that come down as well as platinum plays catch up with gold. But again, when you zoom out on this chart, as much as platinum has had a crazy run here, look at these last few years, guys. We could continue to see platinum run for a while here and still, let's set this to weekly candles. It would still mean platinum is historically undervalued relative to gold. Even if the price of platinum were to double here, it would still just be a return to historical norms. So keep an eye on silver, keep an eye on platinum, man. That catch-up trade is alive and well here. All right, meanwhile, going on overseas, we've got China and the U.S. trade officials to hold talks in London. That is underway as we speak. U.S. President Trump's top trade officials are meeting with Chinese counterparts in London on Monday for talks aimed at resolving an ongoing trade dispute between the world's two largest economies. U.S. Treasury Secretary Scott Bessent, Commerce Secretary Howard Lutnick, and Trade Rep Jameson Greer are representing the U.S. China's foreign ministry said on Saturday that Vice Premier He Lifeng, Beijing's lead trade negotiator, will be in the UK between June 8th and 13th, and that a meeting of the China-U.S. Economic and Trade Consultation Mechanism would take place. The talks come after Trump last week said that he had held a lengthy phone call with Chinese President Xi Jinping as both look to avert a full-blown trade war. We had a little bit of progress on Friday in that trade war. China extends an olive branch to Western auto giants over rare earth shortage. This is pretty interesting. Not so much the fact that this is happening, but the companies this is not happening to. China appears to have offered U.S. and European auto giants something of a reprieve after industry groups warned of increasing production threats over a rare earth shortage. China's Ministry of Commerce on Saturday said it was willing to establish a so-called green channel for eligible export license applications to expedite the approval process to European Union firms. Beijing also granted rare earth licenses to suppliers of U.S. auto giants General Motors, Ford, and Jeep maker Stellantis, Reuters reported on Friday. Funny, do you know what company is not included in that list? If you said Tesla, congratulations, you're paying attention. Tesla is not included in the list of companies being granted rare earth licenses, even though compared to the big three, Tesla is actually more exposed to a shortage of rare earths. Now, I don't know if Tesla being left out of this deal has anything to do with maybe the consequences of the fallout between the president and Elon Musk, or possibly the cause of a fallout between the president and Musk. All I know is the big three are getting their rare earths from China, and nobody else is, including Tesla. We've also got China's export to the U.S. clocked their sharpest drop in more than 5 years, down over 34% in May. Look, we saw a big decline in exports. Not terribly surprising here. China's export growth missed expectations in May, dragged down by a sharp decline in shipments to the U.S., with analysts saying effects of the Beijing-Washington trade truce will be visible in June data. Guys, just a reminder, any statistics coming out of China, you got to be a little skeptical. It's all seen through the filter of what Chinese Communist Party censors want you to see. So keep that in mind here. China exports to the U.S. plunged by 34.5% from a year ago, marking the sharpest drop since February of 2020, according to Wind Information. When the COVID-19 pandemic disrupted trade, imports from the U.S. dropped over 18%, and China's trade surplus with America shrank by 41.55% year over year to $18 billion. Now, those numbers are reflected in some of the domestic numbers here in the States that we saw. We saw that trade balance shrink dramatically in the last couple of weeks. Overall exports, however, in China rose 4.8% last month in U.S. dollar terms from a year earlier. Customs data showed on Monday, shy of Reuters poll estimates of a 5% jump. Imports plunged 3.4% in May from a year earlier, a drastic drop compared to economists' expectations of a 0.9% fall. Imports had been declining this year, largely owed to sluggish domestic demand. That was largely offset by its shipments to Southeast Asian bloc, which jumped by nearly 15% from a year ago, and those to the European countries and Africa, which rose 12% and over 33% respectively. So we're seeing more Chinese sales to Europe, to Africa, to other Asian countries. And at least according to this Chinese data, that is more than offsetting sales to the United States. Again, Chinese government statistics, take that grain of salt along with it, but that is a pretty big plunge in exports. Now, I think we're going to see this data start to reverse because we got this one in freight waves on Friday. New World Order ocean rates up 88% as shippers pounce on lower tariffs. Demand spikes on eastbound Trans-Pacific. It took 1 week for a frenzy to set in on the eastbound Trans-Pacific. Mid-high average spot rates paid by shippers in the 75th percentile of the market for transit from the Far East to the U.S. East Coast have surged by an astonishing 88% since May 3rd, according to analyst Zanetta, now standing at $6,100 per 40-foot equivalent unit. Now, that is a very specific data point. Mid-high average spot rates paid by the 75th percentile of shippers. I'll be honest with you, I've never heard of that data point before, but FreightWaves is very dialed in with what's going on in the world of logistics. So let's assume, for the sake of argument, that that is a widely accepted statistic in the shipping world. This price jump reflects the willingness of shippers to incur higher costs to ensure the movement of goods driven by the temporary window created by the U.S.-China reciprocal tariff pause. In that time, the Far East to U.S. West Coast average price tracked at $5,082. That's up from $2,615. Big jump from China to the West Coast as well. And we're even seeing a decent increase in China to Europe, in Europe to the U.S. The North Europe to U.S. East Coast average spot rate, that increased from 2129 or to 2129 from 2081. So the takeaway from this article, besides some really obscure statistics, is that it got a lot more expensive to ship things across the water after that pause in tariffs. Particular China to the U.S., but even Europe to the U.S. got a little bit more expensive because people are buying up that inventory again. So that's probably going to show up in the trade balance for May when we get that data later on this month, which means we'll probably see some of these GDP estimates come back down as more exports or more imports to the U.S. drives that trade balance higher. And we've got a deflation problem in China now. China's factory gate deflation is the worst in 22 months as economic headwinds mount. China's producer deflation deepened to its worst level in almost 2 years in May, while consumer prices extended declines as the economy grappled with trade tensions and a prolonged housing downturn. Uncertainties from a tariff war with the United States and weak consumption at home have rattled sentiment and fueled expectations of more policy stimulus to combat deflationary measures. The producer price index fell 3.3% in May from a year earlier. That is worse than the 2.7% decline in April and the deepest contraction in 22 months. National Bureau of Statistics data showed on Monday. Once again, guys, Chinese data, grab that grain of salt along with those numbers. But that compared with an estimated 3.2% fall in a Reuters poll. So China is seeing factory deflation. You've got the slowdown because of the trade war. We saw a lot of factories shut down in April. Now I'm sure they're spinning back up now because of the tariff pause. That led to lower prices, but also that Chinese consumer, he's watched all of his wealth go up in smoke in the China housing market, and so he's shopping less because of the wealth effect. That all translates to a deflation problem in China. And remember, when you have deflation, debt becomes harder to pay off because the currency that debt is denominated in gets more valuable, so it gets harder to make those payments. And China's developers have a big debt problem because of all the cities they built that nobody lives in, and they built them all with borrowed money. So that deflation problem could be a big problem for the Chinese. Now going on this morning, we've got big news from Warner Brothers Discovery. They are splitting into two public companies by next year, and the stock is just loving it. Warner Brothers plans to split into two public companies by next year, the media giant announced on Monday. That's the latest upheaval in the industry as consumers transition from cable to streaming. Warner Brothers Discovery will separate into a streaming and studios company, which will include its movie properties and the streaming service HBO Max. And then the other company will be their global networks company, which will include CNN, TNT Sports, and Discovery, among other businesses. CEO David Zaslav will lead the streaming and studio company, and current CFO Gunnar Weidenfels will become the CEO of the global networks business. It also comes as cable giant Comcast is in the process of spinning out its portfolio of cable networks, including CNBC, into a new publicly traded company called Versant. That separation, announced last year, inspired speculation that the media industry would soon see heightened consolidation. Warner Brothers Discovery shares were halted in extended trading Monday morning. I believe that halt has since ended. Right now, we've got WBD shares are up 7.75% ahead of the opening bell. All right, the ticker is moving, so that halt has ended, trading at $10.58. So it looks like the two parts will be worth more than the whole once this split up happens, which typically happens when you get a split. So we're probably going to see a lot more of that in the media space. And then once these splits are all done, we're probably going to see the legacy cable network companies starting to merge because that business slowly dies off. Meanwhile, Apple event to put focus on existential risk of AI struggles. The WWDC conference is underway. Apple shares have been heavily tethered to U.S. trade policies this year, but its annual developers conference could refocus Wall Street's attention On a potentially bigger problem, it struggles with artificial intelligence. The iPhone maker's WWDC event kicks off on Monday and isn't expected to feature much in the way of major AI releases. That could shine a light on Apple's shortfalls with the critical technology, threatening further weakness for its shares with few obvious catalysts on the horizon to turn things around. It's hard to argue that Apple's lack of standing with AI isn't an existential risk, and it would be a real surprise if it came out with a significant AI development or app at WWDC, said Andrew Choi, portfolio manager at Parnassus Investments. If it can paint a future where it is integrating and commoditizing AI, that would be compelling, because otherwise, what is going to get people to buy their next phone for a lot more money? By the way, it's interesting that they should mention commoditizing AI there. That's interesting, because typically when a business becomes commoditized, you see multiples start to compress substantially. And so they're casually mentioning the commoditization of AI here. AI companies are trading at some obscene multiples right now, especially considering most of them have zero earnings. So if Apple is able to somehow commoditize AI, that is not good for the rest of the big tech bubble and the AI mania. I'm just throwing that one out there. Shares are down 19% this week, making them by far the biggest drag on, 19% this year, not this week, making them by far the biggest drag on the NASDAQ 100, which has advanced 3.6%. While much of the sell-off reflects Apple's exposure to President Trump's tariffs and political uncertainty, its struggles with AI have been another significant headwind. Those struggles with AI and the lack of Apple Intelligence doing pretty much anything is why the iPhone 16 was a total flop. And right now, we're looking at Apple shares pretty much unchanged here, up 0.25%, $204.38. That's up about 50 cents this morning. And meanwhile, we've got a strange one out of Japan here. Japan to consider buying back some super long government bonds, sources say. This is interesting because nobody else wants to buy super long bonds other than the Japanese central bank. And so the Japanese government's saying, well, we'll buy them. What's the worst that could happen? Don't answer that. Japan is considering buying back some super long government bonds issued in the past at low interest rates, two sources with direct knowledge of the plan said on Monday, underscoring its focus on reining in any abrupt rises in bond yields. The move would come on top of an expected government plan to trim issuance of super long bonds, such as those with 20, 30, or 40-year maturities, in the wake of sharp rises in their yields. Yields on super long Japanese government bonds rose to record levels last month due to dwindling demand from traditional buyers, such as life insurers, and global market jitters over steadily rising debt levels. The 30-year JGB yield reached as high as 3.185% on May 21st. In Japan, such bonds were also sold off as Prime Minister Ishiba faced political pressure for tax cuts and higher spending ahead of an upper house poll in July, policies that could add to the country's already huge public debt. Yeah, that's it. You know, debt to GDP in Japan, something like 268%. I know. The solution is have the government borrow and spend more. What a brilliant Keynesian discovery you've made over there in Japan. And look, the reason why Japan's government bond yields are blowing out is because people are saying this debt is not worth spit. That's why. Now, we saw a little bit of a rally in JGBs. You know, after that peak on May 22nd, we saw them come down. This is the Japanese 40-year yield. It's currently at 3.056%, well off of its high of 3.69, almost 3.7. But let's set this to, say, weekly candles, and then let's zoom out and get a good look at this chart, guys, because this is what probably the whole world is in for. I mean, look at what these yields have done since 2020 when, you know, we had a zero interest rate policy, a Zerpenberg-fueled inflation epidemic, and then all of a sudden debt is getting so much more expensive. What happens if this happens in the United States? Then keep in mind the fact that just as soon as this debt ceiling issue is resolved, whether it's the big, beautiful bill or some other big, ugly bill, whatever form of a bill gets passed, we know they're going to raise the debt ceiling eventually. They always do. You're going to see something like this happen in long-term U.S. government debt as well, because Secretary Bessent is going to start issuing a whole bunch of 10s, 20s, and 30s. Plus, he wants to term out his T-bill issuance. So we are going to see U.S. bonds start to rise just like they did after the debt ceiling was raised in 2023. So we have got sharply higher interest rates on the horizon, not just in Japan or in Europe, but in the States as well. And last but not least, we got another solar subsidy farm is going out of business. Sunnova files for bankruptcy on residential solar woes. This is dated just this morning. Sunnova Energy said on Sunday it had filed for Chapter 11 bankruptcy protection in the U.S. as the residential solar panel installer buckled under the pressure of mounting debt and weakening demand. Shares were down 36.4% at 14 cents in pre-market trading. Sunnova filed for protection in the bankruptcy court for the Southern District of Texas after warning in March that it might not be able to continue as a going concern. The company listed estimated assets and liabilities in the range of $10 to $50 billion. They had total debt of $10.67 billion as of December 31st. Sunnova said last week it would lay off about 55% of its workforce, or 718 employees, in a bid to cut spending. And earlier this month, its unit Sunnova TEP developer had also filed Chapter 11 bankruptcy protection. Last year, Pierce SunPower, once a pioneer of the U.S. residential solar market, also collapsed following a subpoena from the U.S. SEC about its accounting practices and the departure of its CEO. Hey, look, the SEC does know how to send subpoenas over accounting practices. That's interesting. See also the AI bubble. Companies that put solar panels on U.S. homes said last month a Republican budget bill that was announced in Congress could deal a massive blow to the industry by eliminating a generous subsidy for homeowners that had buttressed the industry's growth. And by buttressed growth, it means basically totally supported an industry that cannot stand on its own without those generous government subsidies. So we have got another heavily taxpayer-financed company going belly up. Yay, renewables. And I just want to say thank you very much to my buddy Sam, who has been a member for 4 months. Hey, Sam, thank you for supporting the channel. He says Getty versus Stability AI started in court today. Are we talking Getty Images? Is that what we're talking about? Is Stability AI engaged in intellectual property theft? Short answer, yes, they all are. That's pretty much what that industry is built on, the theft of intellectual property. So far, the AI companies have lost virtually every IP case that has been brought into court. So that's interesting, Sam. Thank you for the heads up on that one. I will look into that case, Getty/Stability. Interesting you should mention that. Again, guys, without IP theft, this industry just doesn't work. Journalists, artists, filmmakers, everybody, they've basically had their life's work stolen, fed into an AI chatbot, and then spit out for profit, well, or an attempted profit. None of them are profitable. So if they can't be profitable while stealing intellectual property, chances are they also can't be profitable while paying for intellectual property. So that'll be interesting to watch. Thank you, Sam, for supporting the channel. Atomic Coyote says, I'd like to officially let Skynet know I frown upon the burning of Waymos. Yes, I always say please and thank you to AI, number one, because it costs more money. And number two, maybe they'll kill me last when the Terminators take over. Believe it or not, a lot more people than you realize do that. And the AI companies have actually kind of subtly put that messaging out to please stop saying please and thank you when using chatbots, because it causes the LLMs to use more computing power and more energy, and therefore they lose even more money when people are polite. But I don't care. I want the Terminators to kill me last. Thank you, Atomic Coyote, for the laugh and for supporting the channel, sir. And Spotty, thank you, sir. He says MMT is flawed, other than the fact that it's the exactly wrong thing to do and that it results in disaster every time. Other than that, it's really great, though. Possible or humans not capable using correct. No, I'm going to go with it's just flawed. It's just stupid. Printing money to monetize debt is stupid. It's not that we do it wrong. It's that we do it at all. That's the problem, all right? Printing money to solve your debt problem makes your problem worse, all right? Maybe it doesn't make the debt problem worse because debt gets cheaper with the inflation. That's actually a feature, not a bug, of this MMT Keynesian madness system. But the problem is everything else gets more expensive, and life for average people gets hard, and then average people get pissed off, and then they largely peacefully throw bricks off of overpasses. Just throwing that out there. Maybe social unrest has something to do with the fact that life just endlessly gets more and more and more expensive, and no matter what you do, it just seems like you're on a freaking hamster wheel going nowhere. Maybe that's why people are so angry. I just throw it out there. You got to do what you want with it. Thank you, Spotty, for supporting the channel. M&J, thank you for being a Melonhead member for 16 months. says like, share, subscribe. Maybe we get merch. I am working the merch angle. Thank you very much, M&J. Had a problem with the merch vendor, not sending people their merch, not paying me. People are dirtbags. More news at 11. That's just life, guys. But I am working on finding another one, M&J. It's on the list, and thank you so much for everything you do for the channel. New Engineering says, JG Nuke FTW, I appreciate you. Thank you very much. Thank you very much, New Engineering. I'm assuming the G is silent, or is it GNU Engineering? I don't know, but thank you. From one engineer to another, thank you so much for supporting the channel, and I appreciate the good vibes this morning. And thank you, everybody else, for having your coffee with the Melon Heads. Keep it peaceful, folks. If you got something to say, feel free to say it. Just don't throw bricks at cops while you do it. That's not a big ask. All right. Also, not a big ask. Please hit that like button and that subscribe button underneath if you're new here, because we do this one every day. Thank you guys for the super chats and for supporting the channel, as well as you, my magnanimous Melon Heads on Patreon and YouTube. You guys rock. Links down below should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Everybody else, till next time, live small and dream big.